Ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live on a Wednesday night in Denver, Colorado time. I know it's much later on the East Coast, but if you got to catch the playback or you're catching the podcast while you are cleaning your house, working out, at the gym, on the treadmill, hopefully I got something to keep you guys and girls up and you kind of learn something or have something to take away. So, anyway, ladies and gentlemen, boys and girls, and children of all ages, Uber, y'all know I've been following Uber for a while now, looking at their financial reports, but I saw that Lyft did its earnings yesterday and Lyft fell off a cliff. I think Lyft dropped like 5%. I don't know, probably more than that. Lyft stock fell big time because they did good on their earnings, but their driver's numbers had dropped, their riders number, and they make money only one way. So I was anticipating the next day of Uber because, Uber and Lyft, they go hand in hand. They're in the same industry. And so today episode, we're going to take a look at Uber's earnings. But if you haven't done so already, ladies and gentlemen, boys and girls, and children of all ages, y'all know what time it is. Go ahead and make sure.
Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time. And I definitely know you guys and girls don't have a lot of time. So we're going to jump straight into it. It's a late night episode. So what we're going to do, we are going to go over Uber. Let me share this up for you guys and girls. Where are we at here? Let's take a look at their press release that came out early here. Okay, so here we go. Came out today, February 9th, 2020. Gross bookings they had a gross booking of 25.9 billion, up 51% year over year at a high end of the guidance range. A net income. So, Google became a profitable company that I've been speaking about for a long time, watching this company become profitable. Congratulations to Uber for becoming profitable. So they had a net income of 892 million, including 14 billion in net benefit relating to Uber's equity investments. Okay, 1.4 billion in net benefits from their equity investments. I forgot how many companies they had acquired, but they acquired a couple companies along the way too. Good job on them. An adjusted EBITDA of 86 million was above guidance range, with delivery reaching an adjusted EBITDA profitability for Q4. So they have an adjusted EBITDA that's profitable for Q4. They has a net income of 892 million. Not mistaken, I think it's probably their first time. Shout out to them. So right here's some of their highlights that we went over. They grew 51% year over year to 25.9 billion. Their revenue grew 83% year over year to 5.8 billion, or 82 billion of a consistent current basis. A net income attributed to Uber Technologies was 892 million that we just talked about. 1.4 billion in net benefits pre-tax related to Uber equity investments, primarily due to the aggravated unrealized gains related to the revaluation of Uber's Grab and Aurora equity investment. Uber Grab and Aurora equity investment, partially offset by unrealized loss related to the revaluation of the Uber's Dita. Okay, that's I think how you said Data or Dita, DIDI. I remember when they brought them. I think that's the alcohol company that they purchased equity investment. Additionally, net income of 334 million in stock-based compensation expenses. They got an adjusted EBITDA of 86 million, up 540 million year over year. Adjusted EBITDA margin as a percentage of gross bookings was 0.3% up from a negative 2.6 last year in Q4 2020. Their mobility, they're talking about their rides here. They made 575 million. I'm not going to go through all of their numbers because I'm going to go through that in the actual finances. Right here it is, Q1 of 2022. We anticipate. So here's the guidance that they're putting out for the first quarter. They're looking at their gross. This is when you hear people say, hey, they missed guidance or they missed earnings or whatever. This is where they get this from. So here's the outlook for the Q1. We anticipate a gross booking of 25 billion to 26 billion. So if they come out with 30 billion of gross bookings in Q1, the stock is probably going to jump XYZ, right? So if they come below 25 billion or 26 billion, then you're going to see, especially if they fall way below, then it'll hurt the company. An adjusted EBITDA of 100 million to 130 million. Okay. Financials and operational highlights of the fourth quarter. So what they got? They got trips in 2020. I hate when they kind of do this. They put it here. They put 2020. So you're thinking this is the first column. You got to go that next column over to catch it, to make sure. A couple times on this show, I've gone out and read something and got it in the wrong way. So your gross bookings of 25 million, your revenue of 5.7 million. All right. So they got a net income of 892 million. Last year, they had a net income of 968 million loss. So they had a loss last year. As you can see in 2020, they were down 968 million. Now they are positive 892 million. And then just the EBITDA of 454 million, they were down as a loss. Now they are up 86 million. Congratulations, Uber. Not too bad. Not too bad. Not too bad. Okay. Nice to see them move out of being an unprofitable company to becoming a profitable company, netting profits, adjusted EBITDA profitability. Cool, right? So this is when they go into their trips, and I don't want to see that. I'll probably get that out of there. Okay. I do like this. Their mobility is people catching rides. I think this is in the million. Yes. 11 billion in 2021. Delivery, Uber Eats, which is delivery, which is 13 million, which is their bread and butter now, right? Then you saw the freights. Freights is still a pretty small part of their business, but it's growing. But you see their largest growth came from mobility. Their mobility is going up, changed 67%. So this is back, because of the pandemic. A lot of people stopped going places, stopped taking rides. So you're seeing, because before the rides was the number one runner for Uber to make money. And when you see the pandemic hit, you saw a lot of the rides go down. Now the rides are coming back up. So when the pandemic hit, Uber Eats pretty much carried Uber. It made the most money. Now you're seeing the mobility come back up. I don't know if Uber Eats will go down out of the pandemic. I don't know. I don't know if the rides will take back over and Uber Eats will go down, but that's be nice to see. So here they went up 67% in rides. Then they also, for delivery, they had a 34% jump from 10 million. No, not 10 billion. I'm sorry, to 13 billion. Then you see that Uber Freights. Not a whole lot familiar with this business, but it's always been a small piece. They went from 313 million to $1 billion, which is 245 million, right? So here we go. 2021, they made $25 billion, up 51% last year. From last year, they made 17 billion. Now they made 25 billion. Okay, Uber, we hear you. All right. So that's the thing I like about, this is just a press, going through some of their revenue streams here. Let's look at the quarterly reports. So their quarterly reports is, you've seen the biggest growth come in from delivery, which is Uber Eats, 2.4, I think in the millions. Yeah, $2 billion. They made $2 billion off of mobility in the fourth quarter, right? So they made $2 billion off of giving rides, $2 billion off of delivery, and they made another $1 billion off of freights. So do I think Uber is the best company in the world and all this other good stuff like that? No. If you really listen to this show and you listen to my thoughts on it, no, that's not the truth. The truth of the fact is I look at it compared to the other companies. I look at Lyft, look at its competitor. Competitor only makes money one way. When you look at its, you look at Lyft. Also, you got DoorDash in the space. They're delivering and whatever. I don't even think DoorDash became profitable yet. Lyft hasn't become profitable. No, I think they did on their net income. I think they finally did become profitable, if I'm not mistaken. I had to look at theirs again. But Uber was the first one. It became profitable first. And the funny part is it's a household name. I look at companies compared into their space. So inside of their space, I think Uber is, I know it's number one because it has multiple streams of income. It's delivery. It can give you rides with delivery. It can give you, it can pick you up and take you somewhere, and it has freights. So it's nice to see how they dominate in their particular space. So when you look at them and you compare them to their space, Uber, shouts out to Uber. Good job, Uber. So a lot of people look at it, this is for you guys can understand, this is the what you call it, right? Let me see what we had to say here. Man, you know what? I hate when it does this thing here. I hate when they put me on like this. I like to be, there we go. I like to be placed like this, right? Now Power says, I have 100. Whoa, okay, now Powers. Now Power says, I have 151 shares of Uber. I've been holding for over a year. I'm glad it's finally profitable. Hopefully it soars. Yes, the reason why is Lyft at one point, what's Lyft stock price right now? Lyft stock price. Let's look up Lyft stock price. Let's go to Google and look up Lyft stock price right now. At one time, Lyft price was over Google's for the longest. Lyft price is still over Uber. So you look at Lyft. So this is Lyft. They're at $44, right? They went up today probably because Uber goes up, and they kind of move like that. Uber went up, I want to say 4% before the market closed. Then it went up an additional 5% once the earnings were released. So you look at Lyft. Lyft is at $44. Now let's take a look at DoorDash. DoorDash stock. I think they're over $100. Yeah, they're $108. DoorDash is at $108. Now I guarantee you, if I pulled out their financials or their finances, let's see if we can look at their finances. This is $108 stock, right? Their revenue, you know what? Let's look up DoorDash while we're here tonight. Dash. Okay, y'all give me 1 second while I pull this up. Okay. Let's take a look at their finances. Let's look at the last one. I don't know when they released yet, but because I don't follow them too crazy, but their last one, they haven't came out for the year yet. I think their last one was November 9th. So their earnings should be coming out pretty soon. So let's take a look here. I don't want to download it. Hopefully it just shows me. Nope. I'm gonna find you. Don't hide. There we go. Let's look at quarterly results. The quarterly results. All right. Let's see if I'm gonna have to go here. Now, give me 1 second. I'm gonna have to pull up another screen here. I'm gonna find it for y'all. Okay. Here we go. Financial statements. There we go. I found it over here. Had to do a little digging, but I found it, y'all. Give me 1 second. I'm going to bring y'all over and show you the screen here. Let me close this one out. And let me bring this one up. Let's share the screen. Y'all give me 1 second. So here we go. This is DoorDash. This is their balance sheet. Let's go down here to the cash flow sheet, right? Their revenue is in millions. So in 2021, you're looking at this 3 months ending in, I don't have the annual report yet, right? But let's take right here. Their last report, their total revenue was $1.2 billion, right? Their revenue for the whole entire DoorDash was $1.2 billion. Y'all recall what we just saw with Uber released today. Uber Eats by itself, which is the mobility. I think that's the mobility. No, delivery. Under the delivery section, we know that was $2 billion. So Uber Eats by itself has a larger revenue than DoorDash. Just Uber Eats by itself beats the whole entire company. We did not throw in rides, which was another $2 billion. And we did not throw in freights, which was another $1 billion. Now, we go down here. They got a net loss they reported in 2021. As you can look at their net loss, look at this net loss right here. 2021, $100 million. 9 months, it was $300 million. So, unprofitable company, net losses. Uber is profitable, making money or whatever. It is a profitable company. DoorDash, and this stock is trading for $100. DoorDash is over $100, $108 as of today. And it's a losing company. The revenue is way lower than what Uber makes in a quarter, right? Looking at a 3-month period. I don't know. DoorDash may come out with some new earnings that may be crazy. But just to think that this company's over $100. Why is that? So if I look at your peers, Lyft, who doesn't make nowhere near as much as Uber, DoorDash, and I don't know the other one. Those are top 3 ones that I could think of off the top of my head. And they all trade more than Uber. It makes me look at Uber as a fundamental that is undervalued. When you look at its fundamentals, you look at, okay, you got a profitable company in the same space, generate more revenue, netting a profitable, Uber just became profitable too. Become the first profitable one, dominating the entire space. But then again, it's not being respected like everybody else. That's something to look at. It's something like, maybe the market is undervaluing what they have to say, right? Al, what's going on, my guy? Over there on Facebook. Max B, what's going on, Max B? Max B said Darren has been working hard, but the stock is still under IPO. That's true. He's been working hard. Darren, if I'm saying his name right, D-A-R. He got a long last name. Darren is the CEO of Uber, right? You watch his story, you watch him do what he does, but reading about this is classic examples of how people find you, right? This is how classic example of how people find undervalued things, undervalued stocks, undervalued things all the time, right? So this is why people find something like the Declaration of Independence inside of at a yard sale, right? So when you look at this, some people say, hey, now you have the efficient and the inefficient market hypothesis, right? Some people believe the market got everything right. The market doesn't. Because if you sit back and look at this, we just went through the financials. You don't have to go by what you heard or whatever. You're looking at it. Now Powers bring up a good point. She said, why do you think it's undervalued? Big money. I think big money hasn't Wall Street. There's a lot of things that Wall Street hadn't been turned on to. And when I say Wall Street, I'm talking about people with largest amounts of money. They're not sold on the concept of Uber, right? And people haven't found it, seen it, and Uber has just became profitable. But if you see things like this, all my readings, all the things that I've seen, these are the things what they call the 10 baggers. Because how Uber competitors is trading Lyft is at $44. I don't even want to pull up Lyft's earnings. They're going to be ridiculous compared to what Uber has done. And the stock is not trading as much. But you're seeing other companies trade more, doing the exact same thing, doing a lot less. That lets me know that something's undervalued. There's a time as people, we always undervalue things and not be able to look at certain things, right? So the reason why we're talking about Uber today, Uber is because of its earnings just came out. And I had a friend of mine that was very big on the company when it was at $25. It hit $25, it slashed down. I said, let me look at it. I said, oh no, I will never invest in Uber, Lyft, or whatever the case may be. I said, let me take a look at this sector. Looked at all the sectors, looked at all the players in the space. And I said, I don't think everybody's going to make it. Let's look at the companies that are in here, right? So that's just a particular company that I look at. So that's how I look at that particular company. So anyway, that's my concept. Beverly says she's likes Uber too. That's cool. How you doing, Miss Beverly? Thank you for tuning in. But anyway, that's our pull up there on our episode, looking at Uber's earnings come out today. Following them, I've been following them ever since it was at $25. I think I started like, okay, let's look at this particular company. I think it shot up to like $50 some at one time, came back down when the whole pandemic kind of came along. And it had a horrible year last year. Did great financially, finally became profitable, but had a horrible year, right? But this is a company I like to look at and then look at its competition. Look at Lyft, look at DoorDash, look at all these other companies and say, what's going on in this particular space, right? So I think it's a classic reading. And we're in the middle of earnings seasons, kind of towards the end now. And we're going to pay attention to more companies as they do their earnings. And tomorrow is what? It is time for inflation. Inflation reports come out tomorrow. Inflation reports, the CPI, Consumer Price Index, will be out tomorrow. I'm pretty sure inflation will probably be somewhere around 7.2, 7.5% as we make our way to double-digit inflation in 2020. So we're gonna take a look at that tomorrow when inflation reports come out, see what that looks like. And I forgot who else has the earnings coming out. We're gonna take a look at more earnings reports. All right. Let me see what y'all got to say here before I get out. Thanks for the info, Prince. You really make it easier to understand this stuff. Appreciate you. Appreciate you too. Thank you for tuning in, Miss 99 Powers. Thank you. Thank you. Miss Beverly, thank everybody for tuning in today. I got to get out of here. I got to get running. I wanted to break this stuff down short to you guys and girls, and we're going to do some more digging into some of these companies as they come out with their earnings. And also, that'll be it. But until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, make sure you check out my book series, Wesley Learns to Invest, Wesley Learns About Credit, and Wesley Learns About Insurance. A great way to introduce your kids, nephews, nieces, friends, cousins, buddies into that. And definitely appreciate y'all. Oh, look at it. Al, that's my guy right here. And Al, he's in the super chat. He sends $9.99. He says, let's go to Investor Show. Appreciate it, Al. Appreciate it. Y'all got to stop doing this, man. Y'all going to make my haters so much worse off and mad. I don't know how people be mad at somebody who just come on here, just talk finances and go home and get off. But I got to get some rest for tomorrow, and I definitely be looking out for some more. And I'm going to bring you guys and girls more content. All right. Appreciate it, Al. Thanks for the super chat. And to the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe. Y'all know my name. I'm Prince Dykes. I'm the Prince of Investing. Peace. Be safe. I'm out. And thank you.